Morning everyone, it's Nyla from Learn to Trade the Market. Today I wanted to bring you a pin bar setup on the Dow. Now I usually talk about currencies, but this one is something that can't be overlooked. I've had a little bit of activity in the forum regarding the Dow, so I thought I'd put this up for those members who are already interested in trading the Dow, and for those that might be interested who actually have never even seen the Dow. So a lot of people come into the market, the Forex market rather, and overlook some of the other markets that are out there. I do occasionally trade the Dow. It was the market that I first learnt on, and to actually gain access to these, you don't go through a conventional Forex broker. You're looking for a futures broker or a market maker. One company that does the Dow Mini is IG Markets, and they offer a low margin trading instrument called I think it's the September forwards. It's $2 per point, and you can go as much as $20 per point on a contract, and the sky's the limit depending on how deep your pockets are. For more information on that, ask me a question in the forum. But for now, I just want to get on to the actual setup at hand. Actually, it's more a signal in the market that results in bearish price action. There's no real setup to speak of that I can actually quantify by saying, place your stop here and look for your target here. It's more just showing you the signal and then looking at what happens after the signal's formed and how you can trade in and out of the market based on that signal standing. So I just want to draw your attention to the pin bar that's right in the middle of the chart, this massive spike high. We then closed under these moving averages. Now the trend's still down. If I just quickly take that out a little, you can see that it's generally moving down and slanted from left to right. Not a very strong trend. We're at the bottom of a bear market or this bear market leg, and we're just consolidating, but we still are moving gradually lower rather. What I look for is signals to get me into a trade, and I haven't had one for a while on the Dow. I mean, I've played some intraday strategies, but I haven't had a daily signal that's really clear. So once you see a bar like this that just stands out, it's just a very obvious signal. That's a turning point. There's something going on, and especially when it's so large. I mean, it's a 300-point wick on that candle. All right, so there's your pin bar reversal, and it sets up a downside move. And let's have a look. The next day is a little indecision day, and then bang, lower 2 days, resulted in around 400, 500 points of movement. Now here's the tricky part, and I actually took a trade last night based on the fact that we still haven't breached the pin bar high. So the sell signal is still in place. We moved back up to these moving averages, and see this day touched the moving average and closed off the moving average. So we're actually respecting the moving average. The next day we moved up to the moving average again around the previous session's high, and then we're coming back towards or back into the previous day's range. Now that to me set up a short signal, purely and simply because I knew that the bearishness was still in the market because of the pin bar, and we were respecting the moving averages. What I'm trying to teach you guys is how to look at the market, how to read what's currently going on, the current sentiment in the price action, and you can see the market did fall away. And I'll just bring up the account statement here. I actually bought what's called a binary. It's a form of intraday option. I bought it at 24.2 and the closing level was 100. So I made the maximum profit potential on the binary option with a gross profit of 4,548 US dollars, which is around about 5,300 Australian dollars. Alright, so back to the chart. The reason I really took the trade was because of that pin bar. It wasn't really the moving averages. What the moving averages do is just help you find a level, and once the price action starts to respect those levels, you can see that there's a trading opportunity. So when I take it back a little bit, we had some more action here, but it was just choppy. Maybe these moving averages were touched here, but here we were breached. So it's choppy, but as soon as we got that pin bar, it actually gave a perfect move down and then a retest the moving averages, sold off again. So I guess what I'm trying to hit home here, guys, is that if you just were to trade one strategy, following a trend, waiting for a pin bar signal, either trading directly off the pin bar signal or looking for a retracement back up and to follow the the direction of that pin bar. So if it's obviously a short signal, you're going to try and short on a movement back up to higher levels. If it's a long signal, you're going to wait to buy a dip. Alright, so what it's about is making your risk smaller by getting a really decent entry. It won't always be the day after the pin bar. It can be as much as 10 days, as long as that pin bar high has not been breached or the pin bar low hasn't been breached, depending on the way you're trading. Alright guys, hopefully that helps some of you, and I'll talk to you soon.